Fourth quarter profit. Matt?
All right, let's take a look at futures this morning. Just got a few seconds to go until the market opens up, but they have been down and they are moving lower. So we do see equity index futures contracts off about 1.25%, 1.33% on the CAC 40 in Paris right now, but we do see drops indicated. Let's go ahead and take a look at the global macro movers screen, and you can see a number of risk assets here. The far left-hand column is equity indexes, and that will populate as the indexes start to trade. The FTSE opens up 0.4% down, but continues to fall, and the IBEX opens down 1.5%. Now we see the FTSE down also more than 1%. You can see those boxes turning a little bit more red. I love this screen, Global Macro Movers, GMM Go on the Bloomberg. Hillary and I were there for its birth, actually, for the creation of the GMM screen, and it's so great to see how many people use it now. The squares, of course, are gray when there's very little change, and they turn red when they start to fall, brighter red when they fall further, and then something insane, which we won't probably see very often, Anna, is when you get a black box in one of these squares, that means it's more than 3 standard deviations away from its 30-day Z-score. Nonetheless, these are some fairly substantial drops that we're seeing.
Absolutely. That is when we get very excited, don't we, when we see moves of that size, such outsized moves. Let me get to the Spanish economy, Matt, because this is really interesting. We've been building up a picture of GDP as we go through the morning. We've had the French numbers, waiting for the German numbers. The Spanish economy grew, let me just say that word again, 0.4% in the fourth quarter. The estimate had been for a contraction of 1.4%. So that is growth and not contraction, which in itself is really interesting, even if backward looking, but perhaps it tells us something about various economies, in this case Spain's ability to manage the lockdowns. Now, the European equity markets opening then to the downside. That is as global stocks retreat amid concerns about volatile retail trader speculation in the United States. That is the market story, very much the market story. Fascinating stuff, and we continue to talk about it. In the earnings space, though, we've got plenty of news there as well. Givaudan's full-year EBITDA numbers have come through this morning, slightly below the estimates. In a statement to investors, the CEO, Gilles Andrier, said that the company has delivered on all targets in relation to its 2016-2020 strategy. Let's speak to Gilles Andrier, the CEO of Givaudan, today. Very good to speak to you, Gilles. Your business busy making flavors and scents, of course, for food, for drinks, for fragrances, personal care, cosmetics, and the like. I noticed one analyst saying this morning that your performance is increasingly second half loaded for 2021. Give us your thoughts on how this year will shape up for you.
First, we are very happy about this set of results. It was obviously for everyone an unprecedented year, and we've demonstrated with the business model that we have, but also the sort of natural hedges, being very much diversified across client geographies and products, demonstrating the resilience by growing a 4% on a like-for-like basis. With a good sort of, I wouldn't say rebound, but a good improvement of the sort of more non-resilient business like fine fragrances or food service in the late in the later part of the year. Going forward, there's a load of uncertainties, obviously, which is very much defined by how fast the vaccine is going to spread, how fast are the economies either going to be impacted or not impacted. But overall, we stay and remain confident, again, on the resilience of Givaudan. Those products are consumed every day by consumers at home. And with the increased, let's say, cognizance around sanitation, we've seen also a good support in our sales.
I see your meat-free protein business has had incredible growth, from nothing to 100 million francs in 5 years. 2020 was an increase of 25%. And I also have to guess that while we all stay at home, that's a business that really can continue to grow. Is that how you see it, Gilles?
Yeah, absolutely. It's part of those side businesses which were not considered as being so traditional, obviously, which are basically on the side of the core F&F business. So very happy to see the growth. We invested in what we call taste modulators, things which are all natural, which help make those protein applications actually taste good, so that actually consumers are not convinced only about the sustainability benefits of those applications, but also they like it. So in the same way, we also have built a business of what we call active beauty, which are unique ingredients in going into skincare. So those are, which is also reaching another 100 million for the last 5 years. So businesses which help, continue the growth story of Givaudan.
Let me ask you how COVID-19 is changing how you think about what customers want, or changing what customers want. We all know COVID-19, of course, can have an impact on sense of taste and sense of smell. We have to wear masks a lot more, which means we can't smell so much. Is this all impacting on how you're thinking about the business from here?
Well, we are not so much worried, on the consumers part. Obviously, we are, because obviously for the most, what I hear is that the sense of smell, comes back, if ever it disappeared because of COVID. We are obviously very cautious about protecting our employees overall, but also especially our perfumers and flavorists, who obviously would not like to see their smell disappearing. But that has absolutely no impact on our business overall. It didn't change the consumer's pattern of way of consuming.
Where are the most exciting growth opportunities after this pandemic? I mean, once you get to herd immunity, Gilles, once you get to people no longer wearing masks, going back to work, hugging each other, what are you most excited for?
Well, I think we're going to see, I would say, hopefully the rebound of the, let's say, the non-resilient part of the business, which accounts for 15% of Givaudan, so which is the combination of fine fragrances, but also food service, restaurants, events. I'm excited to see that coming back, because it's been going down 15% overall for the year because of COVID. But I'm also excited as well on those, spaces that we are going into, which are all about unique ingredients, which make, at the end of the day, people smile and enjoy products, whether through food or whether through, as I mentioned, active beauty and so forth. So the way we see the next years to come, and that's really part of our 2025 strategy, is to expand in adjacent spaces, again, with the same sort of business model, which is all about unique ingredients, for the most part naturals, who have a very strong benefit and the power of differentiation, whether through the smell, the taste, but also, as I mentioned, around the immunity, for example. We acquired Naturex, which is a 500 million sales company, all in naturals, and half of that is all about immune natural ingredients, which we have seen growing very fast over the last year in 2020. So in those types of spaces, which are going to be interesting to see developing in the next years to come.
perfumery, you can understand why that part of the business, Gilles, might be a little troubled at this point. Have you been able to, I mean, I'm thinking, of course, of travel outlets being somewhere where people often buy this kind of product, and they've been closed. Are you successfully managing to divert resources away from that side of the business to other areas?
Yeah, it's very interesting what happened actually in 2020. Obviously, with travel retail stores represent about 30% of the perfumery retail sales, and so obviously that has been heavily impacted. And alongside the lockdowns, the confinement, stores, perfumery being closed in the cities. But on the other hand, what we have seen, and especially that explains, the very sharp rebound we had in the course of the Q4, is the alternative distribution channels, door-to-door, or what we call specialty retail, stores which sell perfumes in different channels alongside internet, has actually helped consumers to continue to consume some perfumes. And that's how, we ended up for the full year at quote-unquote only a -6% of fine fragrance decline, which is actually a very good result if you consider that most of the what we call the fine fragrance prestige sold in the traditional brick and mortar are more in the -20 to 30%. So again, it's the natural hedges around fine fragrances which has helped us quote-unquote save the year in fine fragrance.
All right, Gilles, thanks so much for joining us. Gilles Andrier from Givaudan. He's a CEO there. They make fine fragrances and flavorings, as well as, you just learned, meat-free proteins. Now, take a look at some of the movers in this market. We were talking about Doc Martens earlier. Anna, do you rock Docs?
I have to say it's been a while, but I have been known to.
Yes, awesome. All right, well, they're doing quite well after their IPO. They priced at 370p, and they're now up to 450p, so 22% gain on the first day of trading, when other equity, the indexes, the broader indexes, are down pretty hard. So not a bad start on what is actually a pretty bad day. And Ericsson is also a gainer today. We talked to the CEO a little bit earlier, as we did just now with Givaudan. Coming up, Robinhood raises over $100 billion to make sure it can clear trades. Well, that's what it says that it needs to do with that money. The CEO defends the decision to clamp down on trading of the meme stocks. We hear from Vlad Tenev again next. This is Bloomberg.
it's non-negotiable for us to comply with our financial requirements and our clearinghouse deposits. So we just have to do that. Robinhood has always stood and will continue to stand with the individual investor.
That was the Robinhood CEO, Vlad Tenev, speaking to Bloomberg. This morning, we have learned that the trading app has raised over $1 billion from its own investors. Joining out to discuss is Bloomberg's Danny Burkett. This is just the latest piece in this saga, which has kept us busy and on our toes all week, of course. What exactly was happening behind the scenes then that has posed so much risk for brokerages, for these platforms that specialize in retail trading, such as Robinhood?
Well, Anna, it really does all come down to mitigating counterparty risk. So to put it in more concrete terms, when a trade is done, it actually takes 2 days for the settlement to happen. And in that 2-day period, whoever is the third party, the clearing firm, the go-between, which in this case would be Robinhood, has to put up money, has to put up collateral to manage risks before that trade is finally settled. But what happens when you get all this volume, all this volatility, the cost of doing so, that amount of money you need to set aside absolutely skyrockets. And a lot of these firms who collect that collateral have been demanding more money set aside as well. So Bespoke Investment estimated that $5 billion at least was needed from Robinhood to put up collateral for these trades. And if you are Robinhood, having to come up with that kind of money overnight is extremely difficult, and you know your users want to continue to put on these trades. That's when we get this reaction of banning the trades and trying to get more capital. Now, some of the bigger firms like TD Ameritrade, Schwab would have had to deal with higher collateral as well. But instead of just banning the trades, they said we're raising margin. Perhaps they're better capitalized and better able to sort of deal with this, to not outright ban the trading, but still putting in some sort of risk management into the system.
After they put this collateral up and then get it back, do we know how Robinhood makes its money? I mean, do we know a breakdown of the companies that pay Robinhood the most money?
So, look, Robinhood gets... This has been one of the really controversial things, that people saying Robinhood gets its money from Citadel. That's why we know that Citadel told that's just not the case. Robinhood has other ways of making money besides the fact that it is a free trading. But I will say one thing that I think will definitely come under scrutiny is this pay-to-flow scheme. What essentially happens is Citadel says, hey, we will in fact pay you if you route your flow orders through us. We bundle up the flow orders and we take care of that for you. I think that aspect will come under scrutiny. But look, I think that the fact that Citadel does that does not mean that the hedge fund side came through and told them not to do this. There is a wall between the two. Not to mention, it would be highly illegal for this to happen. And so at the moment, those are purely rumors. So yes, of course, how Robinhood makes its money is important, but that is just one part of it. And, you know, it would be surprising because Citadel Securities also makes a lot of money from the bid spread on these various trades. So they do benefit when Robinhood continues to pump out these retail trades.
Got it. All right. These are the important issues to address. Danny, thanks very much for doing it. Danny Berger there covering the Robinhood story for us. Take a look at how the markets are doing this morning. Drops across the board in terms of the stock 600. We have a drop there as well. This is the broader European equity index, down 1.5%. S&P futures are down 1.25%. So it looks set to be a very risk-off Friday, at least early on in the session. The dollar is strengthening. You don't really have people stocking up on 10-year yields right now. That's right, 1.04%. But give them maybe a little time, and they will do that. In terms of the breakdown, which industries are doing well and which are doing poorly, almost all of the 20 groups on the Stock 600 are down. Only telecoms, the defensive telecom sector, is gaining today. Let's get the Bloomberg Business Flash now. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Bloomberg sources tell us WeWork is in talks to go public through a merger with a SPAC or blank check company. We're told it's fielding offers and weighing them against interest from investors in a private funding round. It comes 16 months after efforts at a traditional IPO failed. The Wall Street Journal is reporting a deal could value WeWork at about $10 billion. Famous boots maker Doc Martens is surging on its debut, London's largest domestic listing since September. The IPO priced at the top end of the range, raising £1.3 billion for shareholders, including Oda Permira. The offering valued Doc Martens at more than 10 times what Permira paid for it in 2014. Clothing retailer H&M beat expectations for the quarter, cutting costs to partially offset a hit from the pandemic. Profit fell nearly a third for 3 months, but the firm managed to reduce expenses and renegotiate lower rents. H&M says there's a good chance of a dividend in the autumn, but it hasn't decided on how much or when. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thanks very much. Laura writes in London. Now, coming up, permission to export. The EU is set to tighten rules for companies shipping vaccines outside the bloc. More on that battle between the EU and AstraZeneca coming up. This is Bloomberg. Welcome back to the European market open. 22 minutes into Friday's trading session. Moves to the downside across European equity markets follows a weak session in Asia. Now, the EU is set to tighten rules on the export of COVID-19 vaccines and require that companies seeking to ship doses outside the bloc get permission to do so first. The move risks a major escalation in the global battle to secure access to doses and comes as anger among the 27 EU countries grows over the slow rollout across the bloc. For more on this, Maria Tadeo joins us now from Brussels. Good morning to you, Maria. So how does this export regulation work, or the ability to ban if they want to?
Well, Anna, they like to call it an export limitation system, probably because it sounds nicer and it's more diplomatic. But if you look at the details, it is an export ban of sorts. And the way it works is that if you're a company that's making the COVID vaccine in Europe, from now on, you need a certificate. You need to meet a criteria before you export this to a third country. Now, they say if this is for humanitarian use, that is fine. If this is justified, it's also fine. But we need to know exactly whether or not you can service your contract in Europe. That's the bottom line. And, you need to get some context in here and also the timing, because this really explains a lot of the measures that the Commission has taken in such a quick manner. And that's the AstraZeneca fallout and the confrontation over the contract. The Europeans, and this is not a secret now, they really do have doubts and suspicions that some of the money that was designed to go into building distribution for the European vaccines and the vaccines themselves have gone missing. They're not here. Where are the vaccines? That's a question they put to themselves over and over again. They say that with an export limitation, which is, as I mentioned, to some extent a ban, they get a hold of what's coming in and what's going out. What I would also say, by the way, because it's important too, is that AstraZeneca has denied flat out that they do this. They've said we've never diverted anything that was supposed to come to the European Union or into the European Union away from the EU.
The concern is that Europe is stoking vaccine nationalism. That's at least the accusation. How do people in Brussels respond to that?
Right, Matt, and you know that when you get overnight regulation like this, it really changes things for companies. It tends to scare investment. It tends to scare companies too, and it does create issues for the global supply chain. But the impression that we have, and this is, of course, based on the reporting that we've done for this whole week, is that the European Commission has really gone into this bunker mentality where they don't really care about this. They know there may be reputational damage, but the number one priority for them right now, and they're very much pressured by national governments, is to get the vaccines. They need to secure the doses. If that means that you are portrayed as nationalistic to some extent, if that means that you're pushing for Europe first, then so be it, because the focus is very much on the vaccines. By the way, Ursula von der Leyen already today repeating for the second time that she wants the AstraZeneca contract out, and is also insisting that if we get the doses that we need, all of this could be easily solved, but we're not going to accept major cuts to contracts that we already pre-signed to.
Okay, Maria, thanks very much. We'll keep across this story. No doubt it'll run into next week as well. Maria today with the latest on the battle between AstraZeneca and the EU. Coming up on the programme then, retail darlings bounce back. Stocks including GameStop rally after hours as brokerage Robinhood says it will lift trading restrictions. We've been hearing from the CEO of Robinhood talking about why he had to bring in, or why the company had to bring in those restrictions on some elements of trading for retail investors in yesterday's session. That will continue to be talked about a lot. We're also going to have a really interesting conversation with Alberto Gallo on that very subject. So he'll join us from Algebris, and we'll talk about the level of regulation or regulator interest in these latest developments around retail trading and where that will take us. This is Bloomberg.
Welcome back to Bloomberg Markets. This is the European Open. We are 30 minutes into the European trading session. We saw earlier that the stock 600 was down about 1.5%. We are still seeing a drop on the stock 600, not quite as bad, 1.1%. And actually, the other equity indexes are doing a little better as well, but all still down, the majors at least more than 1%. In terms of the industry groups, we still see telecoms as the only gainer right now. Although you do see automakers and auto parts makers falling the least among the losers. Banks are doing the worst, and then you've got, well, here we are again. Consumer products and staples?
And services.
And services, there we go. Of course, recently the group over at Standard & Poor's rejigged the index, and they gave us a lot of acronyms, and these are fun to figure out on the fly. But there you go. Let's get the first word news now. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. A new COVID-19 vaccine from Novavax was effective in big trials in the UK and South Africa, but its protective power was lower in South Africa, where a mutation of the virus is spreading. The results indicate another highly potent vaccine could soon be available to help increase vaccinations around the world. The man who triggered the collapse of Italy's government is ready to support a new coalition to avoid snap elections. Former Premier Matteo Renzi isn't ruling out backing Prime Minister Giuseppe Conte again, but didn't specifically mention him in a meeting with the president. He told reporters his priority is the issues, not who's in the driving seat. The UK expects about 300,000 Hong Kong citizens will take advantage of new visa rules and settle in the UK. The new route for leaving the former British colony opens on Sunday and was offered after China imposed a new national security law. The UK says the restrictions on the city breached the terms of the handover in 1997. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt, Anna.
Laura, thank you very much. Laura Wright here in London. Global stocks are retreating as concerns about a cash squeeze in China add to volatile day trader speculation in the United States. But retail darlings, including GameStop, have rallied back after hours as the brokerage Robinhood said it would lift trading restrictions that it had placed on its customers. Some of the key players in this remarkable story spoke to Bloomberg.
Misinformation out there. This was a technical and operational decision.
It's a game of musical chairs, right? Where you've got too many people short. When the music stops, they have to find a seat.
We are worried about the integrity of the marketplace and the clearing systems.
Everyone's talking about rational or irrational exuberance. And what we've seen is actually some cash on the sidelines.
The administration is taking a look. The SEC is taking a look.
It's non-negotiable for us to comply with our financial requirements and our clearinghouse deposits. So we just have to do that.
We have heard from FINRA. They asked us how we were doing. Luckily enough, we have an automated liquidation system.
That has become very clearly a deeply personal phenomenon. And I would equate it to, like, you know, folks voting with their dollars in order to get back at or make a statement towards big finance.
Technology disrupts every industry. And hedge funds are going to learn that, you know, actually these retail investors aren't something to look down your nose and chuckle about.
Because of the low cost of entry into stock and the low cost of exiting into stock, now you have a diversified force of, it was 14, 15 million people who are basically trading stock.
Let's have a conversation about this then and where we are on markets. Alberto Gallo, head of macro strategies and portfolio manager at Algebris, joins us. Alberto, really good to speak to you. And I certainly don't want to look down at anybody, but I wonder if regulators are going to be taking a look at who is able to trade what over what time frames and to what extent and want to make changes here. Do you think we're going to end up with further regulation of what retail investors have access to here, Alberto?
Good morning. Well, certainly. First of all, we're not into this game. We are on the sidelines. You know, we're not involved into long-short equity trading. But from an external perspective, for sure, there could be some scrutiny that regulators will need to apply to these new platforms. You know, some of the things that have happened are probably not things that would be allowed for professional investors to do. So essentially, there's probably going to be more scrutiny. It's going to be difficult. But overall, what we see here is a small example of what happens when markets become more fragile. And market fragility is a key development over the last 10 years after we have lived through a decade of quantitative easing, low interest rates. These things eventually set up asset bubbles. Assets go up, one day they go down, and then you have credit risk, you have margin calls, and you have platforms like Robinhood which end up having credit risk versus their operators, versus the customers that have been trading on margin, for example. So it's again one example that a decade of monetary stimulus has created market fragility and hasn't really solved economic fragility.
And you led a conference, a CFA conference on that yesterday, about the disconnect between the market and the real economy. What were your conclusions there as to how that's going to turn out? I mean, are these two things going to come closer together, or will they continue to fall further and further apart?
We believe we're at a key moment in history here, with the new U.S. administration having a chance to beat secular stagnation. This is the key question investors have to ask themselves. Is the new Biden administration going to be able to stimulate enough, to do enough structural spending, infrastructure, education, break up monopolies to restore productivity, and therefore enable the economy to get that exit velocity to get out of secular stagnation and help the Fed to normalize interest rates? It is a very difficult task because we are coming from mandates where it was all about corporate tax cuts and it was all about low interest rates. And we know that this hasn't solved economic problems. These are one-size-fits-all measures. If you cut tax rates, if you just reduce interest rates, the haves benefit more than the have-nots, and then you end up with corporate monopolies in a lot of areas, and you end up with lower productivity and therefore secular stagnation. So reversing this cycle is the key challenge for the Biden administration. They are prepared, but execution is the real issue. So we're looking beyond the vaccines and beyond the COVID crisis to try to understand if we can normalize growth and normalize policy. So this is a key moment in history.
So Alberto, do you see what we're the phenomenon we're seeing in markets at the moment from retail investors? Do you see this as part of that scream, that shout for more equality, or is that to overstate the link between what's happening in markets this week and that bigger picture that you outline?
There is a huge disconnect between markets and the real economy. Markets are pricing a V-shaped recovery. They are telling you that everything is fine, similar to pre-COVID. What we see inside the economy is a K-shaped recovery. The lowest quartile of wealth, the poorest people in the population, are still 20% below the levels of employment that they had pre-COVID. Working remotely is only really common for people that earn over $100,000 a year. So there's a lot of people that are worse off, that they're still trying to make up for the losses that they had pre-COVID. Not everyone has assets. Financial assets, are only owned by around half of the U.S. population. So if the Fed lowers interest rates, stock prices go up, this wealth effect is not shared. Now, it is true that policy in an emergency situation can only do so much, can only do one-size-fits-all measures. But now is the time for micro measures aimed at helping small businesses, helping productivity, and helping growth. So if these things happen in the second half of the year with the second tranche of stimulus, then we can see, inflation and growth sustainably go up, interest rates go up, and then we can see like cyclical assets recovering. So the real reflation story that we've been waiting for a long time. But if we don't, then we'll have a deeper liquidity trap where central banks will continue to pump up the economy, we'll have more asset bubbles, and eventually we won't have an exit from secular stagnation. Investors will have to bear more negative interest rates, whether it's nominal interest rates like in Europe or negative real rates against inflation in the US. So we're very focused on return of capital here. And the key to understand whether we have a renaissance is really whether these reforms will happen But one-off checks, and cutting interest rates just doesn't work to restart the economy. So we need more.
All right, Alberto, thanks very much for joining us. Alberto Gallo, their head of macro strategies and a portfolio manager at Algebris, just led a CFA conference yesterday on the spread between markets and the real economy. So great to get his take on these issues today. I want to give you some headlines that we're getting right now on HNA Group. This is the Chinese conglomerate that had amassed stakes in Hilton Hotels as well as Deutsche Bank, but had also amassed $75 billion in debt doing that. And its core business is an airline business, which had been hit hard during the pandemic. HNA Group, according to the Global Times, the chief editor there, who announced that HNA Group may announce bankruptcy at any time. So this is a story that we're keeping an eye on, although the conglomerate has gotten out a lot of those big holdings, Deutsche Bank, for example, still holding a ton of debt. Now,
Matt,
Robinhood raises over $1 billion.
I was just going to get to another piece of breaking news, which is actually just bringing you a line from Reuters that says that Astra is offering 8 million extra doses to the EU through March. 8 million, perhaps, relative to the size of the population of the European Union, a fairly small number, but I only mention it because, of course, this is a subject that we have been covering intensely, and our colleague Maria Tadeo will be back with more on that subject later. Let me take you to what Matt was about to say, though. Robinhood raises over $1 billion to make sure it can clear trades. Up next, we'll hear from the CEO, our interview with Vlad Tenev. This is Bloomberg.
I don't know what it's going to be, but I know that we're going to do whatever it takes to get there. I've been so activated. I mean, this really, for me, is the role of a lifetime, being a semi-retired superhero. This is real deal stuff. It's a really fun ride because the stakes are so high. You can't deny it.
What's better than being a superhero, being a semi-retired superhero, perhaps? Actor Robert Downey Jr. there on the launch of his new venture fund targeting sustainable startups. You can hear more about the Oscar nominees' plans to tackle climate change in this week's episode of Bloomberg Green. That is on Bloomberg TV and on Quick Take. Let's get a Bloomberg Business Flash for you. Here's Laura Wright.
Thanks, Anna. Bitcoin's on track to snap a 2-week slide amid rising optimism of growing demand from institutional investors. Yesterday, Bridgewater's Ray Dalio called the digital currency one hell of an invention, saying his firm is considering cryptos for 2 new funds. Famous boot maker Doc Martens is surging on its debut, London's largest domestic listing since September. The IPO priced at the top end of the range, raising £1.3 billion for shareholders, including owner Permira. The offering valued Doc Martens at more than 10 times what Permira paid for it back in 2014. Clothing retailer H&M beat expectations for the quarter, cutting costs to partially offset a hit from the pandemic. Profit fell nearly a third for 3 months, but the firm managed to reduce expenses and renegotiate lower rents. H&M says there's a good chance of a dividend in the autumn, but it hasn't decided on how much or when. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thanks very much. Laura right there in London with the Business Flash. Quick look at how markets are doing. We're 45 minutes into the session right now, and we're looking at losses on indexes across Europe, although they are dissipating. So not the 1%, 1.5% losses that we saw earlier, a little bit less than that. You can see the Stoxx 600 is down almost 4 points to almost 400. Now, Robinhood says it has raised over $1 billion from investors to ensure that it has enough cash to clear trades. The retail investor app is defending its decision to clamp down on trading in shares of so-called meme stocks. The CEO, Vlad Tenev, told Bloomberg no market participant forced the company to make the move.
So there's a lot of misinformation out there. In particular, there's people saying that we were forced to do this by market makers we route to or other market participants, and I just want to come out and say that that's categorically false. We weren't directed by a market maker or any other market participant. This was a technical and operational decision that we made, because Robinhood, as a brokerage, has financial requirements, including clearinghouse deposits that we have to make to various clearinghouses. Some of these requirements fluctuate based on volatility in the markets, and in this current unprecedented environment, can be substantial. So to protect the firm and protect our customers, we temporarily disabled buying in these securities. And we hope to re-enable buying as soon as tomorrow morning.
So that said, did any of your investors or any other market makers ask you to halt these trades, even if that's not the reason why you did it?
No.
So talk to us then a little bit about why you would allow users to sell but not buy if you're about democratizing finance.
Well, users not allowing to sell is very, very painful would be very painful to customers. Getting out of a position, that you're holding, and not being able to do that is painful. And we stand with our customers. We want to give them the ability and the platform to invest in stocks, buy and sell. Restricting buying, obviously not as painful to customers as restricting all trading in a symbol.
So, question from a viewer here, Vlad. If hedge funds can short 140% of a stock, but retail can't go long because of volatility in free markets, how does that make sense?
Well, I mean, look, it's non-negotiable for us to comply with our financial requirements and our clearinghouse deposits. So we just have to do that. Robinhood has always stood and will continue to stand with the individual investor, their ability to have access to buying and selling stocks. And I've got to say now, I can kind of understand how Clorox and Lysol were feeling at the beginning of the dynamic when there's so much demand for something. So we're doing what we can. We hope to have them enabled tomorrow morning. And, the team's been working incredibly hard day in and day out, even before this, so that we're available to our customers and we operate and run a reliable service for them.
You're now facing scrutiny from both sides of the aisle. AOC tweeted earlier, "This is unacceptable. We need to know more about Robinhood's decision to block retail investors from purchasing stock while hedge funds are freely able to trade the stock as they see fit. As a member of the Financial Services Committee, I'd support a hearing if necessary." Ted Cruz retweeted that and said, "Fully agree." Will you come to Washington, if necessary, to testify about this?
We are glad that both sides of the aisle are coming together here, obviously under difficult circumstances that have been challenging. Look, we're always open to having a conversation. We think this is a great opportunity to educate the public as well about how some of the mechanics around settlement in the financial markets work. I think there has been a lot of misinformation out there about why Robinhood did this. And we, first and foremost, did it to protect the firm and our customers.
All right. In any case, we're going to get Anna's mic back on. I saw her mic was on, so we're going to get her mic turned on, and she will rejoin the program. When we come back, we're also going to talk to MLive's Richard Jones. He joins us to discuss what's going on in this market, and when earnings will matter to stocks again. This is Bloomberg. Welcome back to Bloomberg Markets. This is the European Market Open. We are almost an hour into the session with equity indexes down 1% across the board. Joining us now is Richard Jones, Bloomberg's MLive FX and rate strategist. And Richard, given the erratic movements in a few brick and mortar retailers recently, I guess the MLive question of the day is, when will earnings matter to stocks? What's your take on this?
Yeah, good morning, Matt. Well, I think the best answer to this question was provided by my MLive colleague in Asia, Kyung-Hwa Kim. And I think her point is that in the short term, markets are going to continue to be directed by monetary and fiscal policies this year, much as they have been through most of last year. I think the liquidity that we have in the system is more important right now than anything else, including earnings, because I think with the pandemic sort of dragging on, you're going to have monetary policy and fiscal policy still being very aggressive, and that is going to be the big driver of price action this year. I think earnings probably will come back into vogue once we get over the sort of the pandemic and the economy gets back on its feet sufficiently for central banks to be able to move away from the extreme accommodation we see now. But for the near term, and I think that probably runs for the whole year, it's going to be policy that drives equity valuations.
Richard, thanks very much. Richard Jones from the Markets Live team. Thank you. Just a quick word on German unemployment. We get those numbers just in the last minute or so. German unemployment fell by 41,000 in January. The estimate was for a 7,500 increase. So that tells you a lot about how unpredictable the jobs market is at this point. That is it for the European Market Open. Surveillance is up next. This is Bloomberg.
Robinhood raises over $1 billion to cover trades. Its chief executive tells Bloomberg it restricted buying of certain stocks to protect its financial positions. The EU is set to tighten rules on the export of coronavirus vaccines. Ursula von der Leyen tells AstraZeneca it must honor its contract. And H&M earnings beat expectations amid lockdowns as the new chief executive cuts costs during her first year leading the retailer. Will speak to the company's CFO. Well, good morning, everyone, and welcome to Bloomberg Surveillance. Yes, it's Friday. It's been a pretty heavy week on the markets, looking at everything that's been going on with Robinhood. I know most of us were actually glued to our screen well into the night. Now, this is what the markets are doing today. The focus firmly on what's happening between hedge funds and, of course, some of these retail investors, Robinhood in the mix, and really at the forefront of certain criticism from U.S. lawmakers. The other thing I'm looking at actually is silver. Silver, for me, is extremely interesting, because we saw exactly what we could have started to see a couple of weeks ago when it came to stop games. Silver markets witnessing this unprecedented surge in options volume after Reddit day traders talked up the metal as the next short squeeze markets. And then overall, we just look at the vaccines, the rollout, and some of the earnings, a little bit of pressure on European stocks. Now, another day on Wall Street with the enthusiastic Reddit retail investors taking on the massive short positions from hedge funds. Take a look at the after-hours trade in GameStop, AMC, and BlackBerry. So it's been something that we've actually spent quite a lot of time on. Before this surge, things got dramatic when trading apps like Robinhood and Interactive Brokers restricted tradings on their platform. Now, this infuriated the retail traders who, now as a matter of principle, say they are holding on to their position. We also learned that Robinhood is drawing on its bank credit lines to make sure it has the cash on hand to clear trades. Now, joining us to discuss all of this is Danny Berger. Danny, I mean, it sounds like something out of a movie. What exactly is happening behind the scenes that posed so much risk for these big brokerages?
Francine, it all really had to do with the risk that was built up in the plumbing. And this is kind of the thing that we usually don't pay attention to because it happens seamlessly. But essentially, the function just requires a lot of cash that Robinhood did not have. When a trade is made, there's basically 2 days until that trade settles. And in the meantime, the party that clears that trade, that acts as the go-between, in this case, it's Robinhood, needs to put up collateral until that trade settles. Typically, this is easy for them to do, but with the volume and volatility in these stocks, they were all of a sudden required to put up more money before these trades settles. Bespoke Investment puts the amount at about $5 billion at least. And if you're in Robinhood's shoes, all of a sudden you need to come up with billions of dollars overnight, and you know that your users are going to continue to make this trade as well. So the amount of money you're going to have to hold is only going to increase. And that's when we get this situation where Robinhood starts to pull down on its credit lines. We also learned that they're looking at more than $1 billion investment from its already existing investors to better capitalize themselves to deal with this. Because at the time of yesterday, they weren't able to, and that's why they banned trading. We look at some of the bigger firms like a Schwab or a TD Ameritrade. They're a little bit better capitalized, but still it was volatile enough that it had an impact on them having to put up collateral. So they raise the margin requirements for trading to try to take some of the risk out as well. I mean, at the end of the day, everybody's risk models were just absolutely ringing off the alarm.
Daniel, we're just getting some breaking news. So GameStop currently rising some 143%. I had to take a double take. 143% in pre-market after some of the trading curbs have been lifted. Will there be any permanent damage from this?
Well, it looks like the Reddit rally itself hasn't stopped, but long term, a lot of these users are furious at Robinhood. Robinhood did take a while to come out with really a clear statement over what was happening. And because of that, you have these conspiracy theories now starting to float around. People asking, oh, did the hedge funds make them stop doing these trades, which would be highly, highly illegal. And we'd have to imagine, therefore, very unlikely. And look, Robinhood has been rumored to want to IPO this year. Those prospects might now be seriously damaged, with users saying that they're going to abandon the app en masse. I've also been speaking to a lot of derivatives traders who are now fearful of more regulation on the derivatives market because of this, that things might happen like raising margin requirements because regulators are fearful of the risk that's in them that they perhaps didn't see before. So that's another angle to this. We might see the derivatives market really be altered from this as well, Francine.
Thank you so much, our Danny Berger there with the very latest on GameStop. I lose my voice when there's these big news stories because I'm looking at the numbers, Danny, and we're all trying to make sense of it. Now, how do you run one of Europe's biggest insurance companies during a pandemic? My next guest heads up Italy's biggest operator, which is active in life and non-life insurance across 50 countries around the world. The company recently put forward a restructuring plan as it gets to grips with a struggling Italian economy, political uncertainty, and of course, a global health crisis. Well, joining us this morning is Philippe Donnet, the Chief Executive of Generali. Mr. Donnet, as always, thank you so much for giving us a little bit of your time, and I want to talk about your restructuring and some of the plans for the future. Is there anything, I mean, every day for the last week, we talk about nothing else than this fight between hedge funds and retail investors. Do you worry about the stability of the markets? Does it reach your world, or is it something that's very separate?
No, I think it's very separate. As you know, we are a company, insurance and asset management company with a strong European focus, and we are looking at investments with a very long-term view, and our investments are, as you know, driven by our insurance liabilities. So we are protected, I would say, by our long-term view on the world and on the economy.
Mr. Donnet, talk to me a little bit about some of the organizational changes that you've put in place this week. So this is in order to accelerate the delivery of your plans. What will change exactly? How are you expecting to deliver better given the changes?
Well, our plan was already very ambitious before the COVID-19 crisis. And you know that last year in November, during our Investor Day, despite the COVID-19 crisis, we confirmed our strategy and we confirmed all our financial targets. But we need to accelerate the execution of our plan to secure the delivering of our targets. So it was the right time to change a little bit our organization, to make our decision-making process faster and simpler, and to be even more focused on the priorities as they have been redefined by the emergency of the COVID-19 crisis. I would say that we need to accelerate on the investment management together with the liabilities, and this is the very innovative part of our organization, because we are the only insurance company creating a position of Group Chief Insurance and Investments Officer, because in our business you cannot look at the investment without looking in the same time at the liabilities. Then we want to accelerate the growth of our asset management, because you cannot be a strong life insurance player without being a strong asset manager. And then we want to further accelerate the digital transformation, which is now has to be part of our strategy, of our operating processes, of our interaction with customers and distributors. So these are the principles for this new organization.
And Mr. Donnet, I mean, some of this acceleration, is it also because the trends that we've seen because of the pandemic have accelerated significantly? So when you look at some of the asset management, concerns out there, given possibly bubbles, or also given some of the challenges for digital, how will the pandemic change the way that insurance companies operate?
Well, once again, the pandemics had financial consequences, and for example, probably the most relevant for an insurance company is the impact on the interest rates. The interest rates were already low before the pandemic, but they are now lower, and they will be lower for a longer period of time. It's obvious that an insurance company, especially mostly life insurance company like we are, need to adapt itself to this new environment. We started this move a long time ago already. We were the first mover to adapt our company to the low interest rate, but we have now to do more. We know that they will be low, the interest will be low for a very long period of time. So it's very important to really look together investments and liabilities. And then, of course, the pandemic has also accelerated, I would say, the digital world, because people have to be able to work from home. Currently, 90% of our employees are working from home, but our agents needed to adapt themselves to digitalize the interaction with their customers, because agents could not visit their customers. Their customers had to stay home. So the new interaction will be fully digital, which doesn't mean that it will be fully direct. It's proper the opposite. The crisis, the pandemic, the lockdown have also legitimated what we always said, the importance of physical presence and physical distribution.
Monsieur Donnet, one of the things that I imagine life insurance companies will have to decide is whether you penalize customers that refuse to take the vaccine. Are there, what's your thought on that? Is it something that you're looking at? Are you speaking with other companies to try and figure out what the best way forward for this is?
No, we don't intend impose the vaccine to our customers. I think that it's a personal choice. Personally, as soon as possible, I will get vaccinated, but it's definitely a personal choice, and I don't think that an insurance company should interfere into this personal choice.
Are you planning any big deals for Generali? Is there something that you would be interesting, to become even bigger? Make sure that you have the critical mass to deal with whatever is coming your way.
Well, look, maybe you remember that in 2008 we were not in a great condition because of the crisis, and basically it took us almost 10 years to recover from the 2008 crisis. This time is completely different. We entered this crisis in a strong position. Our solvency ratio is still navigating above 200% in the middle of the crisis. So we will exit this crisis even stronger because many other smaller and medium players will be under pressure. So it will create new opportunities for us. We still have 2.5 billion euros of cash to allocate to acquisition. We are looking at many opportunities. As I said, there are more opportunities than before. I hope we will be in a situation to make one, but we will remain very disciplined strategically and financially.
Monsieur Donnet, is there anything in particular that you'd be interested in buying? Is it a part of the world that seems more attractive now, or is it a type of business?
We are very much focused at the moment on Europe and insurance companies. So we are looking at some interesting opportunities, I would say, in Europe, in countries where we already are, or very close to Europe. And we are looking mostly at property casualty companies or protection business companies. Talking about the asset management, we are pursuing the construction of our multi-boutique platform as well.
Monsieur Donnet, thank you so much for joining us. Here's Philippe Donnet. He's the Chief Executive of Generali. Now, coming up, Robinhood defends its decision to clamp down on trading of shares of retail investor darlings. We hear from the Chief Executive, Vlad Tenev. That's coming up shortly, and this is Bloomberg.
it is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, GameStop was up some 143%. That was a very short while ago. And that was now gaining some 92%. That's, of course, on the back of the tumultuous couple of days that we had on GameStop. And this is after some of the trades actually started resuming. So GameStop initially rising some 143% pre-market after some trading curbs have lifted, now gaining some 92%. Robinhood is defending its decision to clamp down on trading in shares of darlings of the retail investors. Now, the chief executive, Vlad Tenev, told Bloomberg no market participant forced the company to make the move.
So there's a lot of misinformation out there. In particular, there's people saying that we were forced to do this by market makers we route to or other market participants, and I just want to come out and say that that's categorically false. We weren't directed by a market maker or any other market participant. This was a technical and operational decision that we made because Robinhood, as a brokerage, has financial requirements. Including clearinghouse deposits that we have to make to various clearinghouses. Some of these requirements fluctuate based on volatility in the markets, and in this current unprecedented environment can be substantial. So to protect the firm and protect our customers, we temporarily disabled buying in these securities. And we hope to re-enable buying as soon as tomorrow morning.
So that said, did any of your investors or any other market makers ask you to halt these trades, even if that's not the reason why you did it?
No.
So talk to us then a little bit about why you would allow users to sell but not buy if you're about democratizing finance.
Well, users not allowing to sell is very, very painful would be very painful to customers. Getting out of a position, that you're holding, and not being able to do that is painful. And we stand with our customers. We want to give them the ability and the platform to invest in stocks, buy and sell. Restricting buying, obviously not as painful to customers as restricting all trading in a symbol.
So, question from a viewer here, Vlad. If hedge funds can short 140% of a stock, but retail can't go long because of volatility in free markets, how does that make sense?
Well, I mean, look, it's non-negotiable for us to comply with our financial requirements and our clearinghouse deposits. So we just have to do that. Robinhood has always stood and will continue to stand with the individual investor, their ability to have access to buying and selling stocks. And I've got to say now, I can kind of understand how Clorox and Lysol were feeling at the beginning of the dynamic when there's so much demand for something. So we're doing what we can. We hope to have them enabled tomorrow morning. And, the team's been working incredibly hard day in and day out, even before this, so that we're available to our customers and we operate and run a reliable service for them.
You're now facing scrutiny from both sides of the aisle. AOC tweeted earlier, "This is unacceptable. We need to know more about Robinhood's decision to block retail investors from purchasing stock while hedge funds are freely able to trade the stock as they see fit. As a member of the Financial Services Committee, I'd support a hearing if necessary." Ted Cruz retweeted that and said, "Fully agree." Will you come to Washington if necessary to testify about this?
We are glad that both sides of the aisle are coming together here. obviously under difficult circumstances that have been challenging. Look, we're always open to having a conversation. We think this is a great opportunity to educate the public as well about how some of the mechanics around settlement in the financial markets work. I think there has been a lot of misinformation out there about why Robinhood did this. And we, first and foremost, did it to protect the firm and our customers.
That was Robinhood Chief Executive Vlad Tenev. Now, coming up later on Surveillance, we'll also speak with Mark Carney, the UN Special Envoy for Climate Action. Don't miss that interview shortly after 11:30 a.m. London time. And this is Bloomberg.
This looks like pockets of frothiness, some irrationality, undoubtedly, some nonsense, undoubtedly.
There's a risk profile developing here.
Things that happened in markets that no regulators expected.
The regulatory system, the oversight system is lagging behind. That's going to create volatility.
That's one of the reasons why you actually want central banks to be there.
Are there systemic risks? I don't think there are from this.
It's bubbles in the credit markets that we have to worry about, not bubbles in asset markets per se.
If this starts to stimulate an overall de-risking, then I think it's a bigger problem for the market.
some of what we've heard there from our guests on the market action this week. Now, coming up, how should the European Central Bank play its part in easing the economic crisis facing the euro area? I'm looking forward to our exclusive conversation with the Governor of Ireland's central bank. We also look at some of the market movements, and of course, we'll talk GameStop a little bit later. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The European Union is demanding AstraZeneca fulfill its contractual obligations on delivering COVID vaccine doses. A shortage across the continent is forcing countries to slow down vaccinations. Commission President Ursula von der Leyen says a deal with Astra will be made public. The dispute started when the firm cut deliveries to the EU due to a production glitch, prioritizing doses here in the UK. A new COVID-19 vaccine from Novavax was effective in big trials in the UK and South Africa, but its protective power was lower in South Africa, where a mutant of the virus is spreading. The results indicate another highly potent vaccine could soon be available to help increase vaccinations around the world. And the man who triggered the collapse of Italy's government is ready to support a new coalition to avoid snap elections. Former Prime Minister Matteo Renzi isn't ruling out backing Premier Giuseppe Conte again, but didn't mention him in a meeting with the president. He told reporters his priority is the issues, not who's in the driving seat. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now let's focus on the pandemic response by Europe's central banks. Yesterday, Pascal Donohoe told surveillance that Ireland should be able to ease virus curbs starting in March. The Irish finance minister said he was confident the measures among the strictest in Europe would drive down the virus. So how should the European Central Bank play its part in easing the economic crisis facing the euro area? Well, joining us now for an exclusive conversation is Gabrielle Makhlouf, the governor of the Central Bank of Ireland. Governor, thank you so much for joining us. I have to say, central banks have really stepped up already in 2020, so I don't know if it's fair to ask you to do more at this point, but how do you see the economy recovering? So there are extra lockdowns, there are vaccine delays in Europe. Are you going to have to revise downwards your forecasts?
Good morning, Francine. I'd sum up the economic outlook, or my own take on it, as cautious optimism amidst very high uncertainty. What we can see is, in the near term, a weaker outlook than perhaps we had hoped for a few months ago. But, and it's a big but, assuming the vaccination programs are rolled out, we see the second half of the year as much more positive and growth coming back. I mean, within Ireland itself, our medical, pharmaceutical and IT sectors actually had a reasonably good year last year, and our GDP was positive last year. Now it's a patchy picture because particular sectors have been hit significantly, and unemployment is higher. We see the resurgence, the resurgence of the pandemic and the restrictions will definitely across Europe have a negative impact in the near term.
Governor, there seems to be a concerted action, or at least a wanting by ECB officials to make the markets believe that we could see a rate cut. Do you believe a rate cut is coming, and what would prompt a rate cut right now?
Well, I don't think a rate cut is coming right now. It's only a week ago since the Governing Council of the ECB met, and we looked at the evidence, looked at the facts, and decided to maintain our position as we had the decisions were made back in December. Our toolkit is available to use, and we haven't ruled out using any of our options, including a rate cut. And when we get together in March, we'll make a call. It'll depend ultimately on what is happening to the outlook. But as I said, right now, today, I don't think that's warranted. The near term is going to be weaker, but as I said, it is a but. Dependent on the vaccination program rolling out, we see the second half of the year as better, and we see a better outlook for 2022. But the important thing, and I suppose probably the key message for today, is that now is not the time to roll back either monetary stimulus and in particular fiscal stimulus. I mean, I think that's the picture we're seeing at the moment is really, that is the key message from me, certainly.
And Governor, do you think a strengthening euro from now would actually warrant a rate cut?
Well, I think the strength of the euro is something that we keep a very close eye on. Also, we don't target it, but it's something that we pay very close attention to. And if we come to the conclusion that it's going to affect our price stability objective and our overall monetary policy stance, then certainly that's going to be an option that we would consider. But as I said, it's only a week since we met and took a particular decision, and I think the decision we made was absolutely the right one. But we will keep a very close eye on what's happening to the euro.
But was there, because we talk more about a rate cut now since that decision, that was, as you say, just a couple of days ago, do you think there was an understanding or a worry that the market was mispricing the full toolkit of the ECB?
I don't think so. I think as I said a few minutes ago, a lot of economic news and economic data right now, and as a result, market commentary is clouded by very high levels of uncertainty. I think we've been very clear on what we're trying to do, what we're trying to achieve, and what is important for us right now. I think the markets at the end of the day do understand that. I hope they understand that our toolkit, our actions over the last year have been, as you said, we've stepped up. And when we've seen evidence that's required us to make some changes to our policies, we've made them. We've made some changes in December. We confirmed our position a week ago. If the facts change, then we'll look at them again and make a different decision. Right now, my colleagues and I are comfortable with the decisions we made a week ago.
Governor, when would a financial condition index be most useful? During the crisis or after the crisis?
Well, I think that sort of index, it would be most useful once everyone understands what it is, what it means, and how it works. So if we were going to have an index like you just described, it will need time, I suspect, for it to be well understood by everybody. We're already right in the crisis. So we can't wheel the clock back and say, do we need a new index before the crisis comes? I think the important thing for us and for the markets is to be extremely vigilant about what the data is telling us, but to also be extremely flexible in the way we apply our toolkit. We need to help ensure that markets work, financial conditions are right, and our policy objectives are ultimately delivered. In this particular crisis, which, as we've been saying for quite a while, is not a financial crisis, it's a health crisis. The role of fiscal policy is critical. And as I said earlier, it's really important that both fiscal policy and monetary policy right now are not rolled back. They're playing the role they need to play today.
Governor, would you worry if we had a financial, condition index that actually it would take precedent over inflation, or that investors would look at that more than inflation expectations and therefore fuzzy the picture?
Well, there's always the risk of that. It ultimately depends on what it is you design. And also it depends on the clarity of our own forward guidance. So I think we're speculating a bit. I mean, at the end of the day, the ECB's objective is price stability. That's what we're mandated, and that's what we're focused on. So we would have to make sure that the design of any new instrument or index, as you just described, communicated the messages we want to communicate. So it's ultimately in the design.
I think you talked in the past about Bitcoin, and actually, seemed to suggest that it was not unlike the tulip mania. Given what we've seen on Bitcoin and other financial assets, where are we right now? How should central banks look at this?
Well, central banks, and especially central banks in their regulatory role, need to pay attention to what's happening in the same way that they pay attention to what's happening in financial markets generally. As the UK authorities said a few weeks ago, if people want to invest in Bitcoin, they're going to be prepared to lose all their money. That's certainly my view. I personally, I'm not sure why people invest in those sorts of assets, but they see them as assets clearly, and they see them as investments. Our role is to make sure that consumers are protected. I see that as the main role. I don't see financial stability issues at the moment arising from Bitcoin itself. I worry more about consumers making the right choices.
I was going to ask you about financial stability, actually. Is there anything that you're seeing right now in any space, an asset class or even, what we could be creating, where you would worry about financial stability?
at the moment, the system has the resilience we've built up over the last 10 years since the financial crisis has paid off, and we've seen the financial system draw down on all that resilience. And I think it's done it pretty well. I mean, certainly within Ireland, we feel, and we published some forward-looking analysis before Christmas. We feel our system is pretty resilient even against severe scenarios. The key thing now is to rebuild that resilience, not just in Ireland, but across the euro area and across the world. The one area that does concern me, and it's been an area of focus for me personally now for a little while, is the whole area of market-based finance and non-bank financial intermediation. I mean, before the crisis, I was very keen to sort of understand exactly the flows there and the role that market-based finance was playing. The crisis back in March showed us vulnerabilities in the sector and persuaded me, and I think persuaded many of my colleagues around the world, that we need to look carefully at how market-based finance is regulated. And certainly I've been arguing for, and I think, again, many of my colleagues are persuaded that we need to develop a macroprudential framework for that sector. But that's the one area today that I'm probably a bit concerned about. But ongoing vigilance across the whole system is necessary.
Governor, thanks so much for your time. Gabriel Makhlouf there, Governor of the Central Bank of Ireland. Now, coming up, permission to export. Well, the EU is set to tighten rules for companies shipping vaccines outside the bloc. We'll have plenty more on that shortly. And this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, Bitcoin has surged above $35,000, with brokers attributing the move to Elon Musk mentioning in its bio page on Twitter. Now, the largest cryptocurrency spiked about 15% within minutes as the London trading day got underway. The Tesla founder Musk's page on Twitter simply said Bitcoin, hashtag Bitcoin, actually, with no further explanation. Now, there's quite a lot going on in the markets. We continue looking at GameStop. Remember, it was at the beginning of the program that it started trading in pre-market as some of The restrictions were lifted, and GameStop currently 106% higher. Now, the EU set to tighten rules on the export of COVID-19 vaccines and require that companies get permission before shipping doses outside the bloc. Now, for more on this, our Maria Tadeo joins us from Brussels. Maria, I mean, this is a fight. This is like the epic fight like we haven't seen, before, certainly not with vaccines. How would the export ban actually work?
Yes, Francine, and you make a good point there. It's very unusual to see the European Commission, which tries to stay out of this, go after one company and also mention a CEO so publicly in the way that the European Commission has done with AstraZeneca. In terms of this vaccination ban, what they say, and they like to call it, is an export limitation. They don't want to call it a ban because they know it makes the EU look bad. But if you look into the details, it does open the way to do that. And the way it works is that if you're right now a company in Europe that is making the COVID vaccine, before you send it out, you ship it out of the European Union, you need a certificate of authorization from authorities. If that meets your criteria, humanitarian reasons, then that is fine. But if it doesn't, then that vaccine needs to stay in Europe. What European officials brief behind the scenes is that this is really about checking what is being made here and what is leaving the European Union. They worry, and this is not a secret at this point, that the money that they paid for distribution to make vaccines has gone somewhere else, and it's not here, and it's definitely not reflected in the deliveries. But overall, nonetheless, this is a big PR problem for the European Union to explain what's happening here. And today we had Ursula von der Leyen forced to finally come on the record to explain what's gone wrong here. She insists the European Union is a victim in some ways. It's the companies that are not delivering, and again, doubling down on that commitment to make public the AstraZeneca contract. She says that would finally clear the air, but that remains to be seen.
Thank you so much, Maria Tadeo, there with the very latest on this pretty big spat between AstraZeneca and the EU, with possible controls coming from the EU. Now, coming up, cost cuts at one of the world's biggest clothes retailers as H&M reports a 32% drop in pre-tax profit. The company's chief financial officer gives us his first interview of the day. That's coming up next, and this is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It
it is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, H&M has delivered earnings ahead of estimates for the fiscal fourth quarter. The Swedish clothes retailer cut costs as pre-tax profit fell some 32%. That's a smaller drop than analysts had expected. Lockdowns continues, of course, to hit sales. H&M says it plans to shut about 250 stores over the course of the year. Now, to talk about all of this and the outlook, of course, going forward, is Adam Carlson. He's the Chief Financial Officer at H&M. Thank you so much for joining us, Adam Carlson. Let me start with the dividend. When you say that actually there are good prospects of a cash dividend in autumn 2021, can you elaborate on what would derail the payment of that cash dividend?
Hey, good morning, and thank you for having me. As we write here in the statement, the current circumstances are very, very uncertain. So right now we are in the midst of the second wave of the pandemic, and we need to wait better visibility before we make any judgments. And this is then the statement that the board has made in the full year report.
So how much are you expecting to actually distribute to shareholders if it all goes to plan?
This is, as I said before, too early to judge. We believe that we left 2020 in a healthy and robust financial position, but as we are sort of all fighting a second wave of the pandemic here, we will await better visibility on how the situation will develop.
I know in the store closures, it's basically net, it's 250 stores left, but that is, I think, what you exactly also said at the last quarter. Is there a feeling that you'll have to shut more stores if the pandemic or if the lockdowns exceed what we have at the moment?
It is the same indication that we gave after third quarter, and it is a dynamic target. We both see, of course, that the stores play an important role in the total customer experience. So the store closure per se is not an ambition. It's rather to sort of optimize how we meet the customer. So as I mentioned, it's a dynamic target, and we continue to evaluate. And given the flexibility we have in the rent and lease agreement set up, we are able to be flexible and continuously judge this going forward.
Mr. Carlson, I haven't been in any kind of shop, I think, since March, but my spending hasn't necessarily gone down. You make 28% of your online or of your sales online. Do you expect that to stay at that level or to rise?
We saw a very strong online growth, and the positive side of it is that we see that when stores were able to open, we could really see the positive combination of having both stores and online. So very happy to see a very strong online growth during fourth quarter when stores, at least for the majority of the quarter, were possible in many markets to be open. So we see a very strong combination here, but for the time being, online is the growth driver.
Can you give us an indication of what specific ESG targets you've put in place to issue your first sustainable linked bond?
We work, of course, with a broad ambition when it comes to ESG, but parts that we decided to highlight is the very ambitious material goals that we have. We have the long-term ambition towards 2030, but then also more short-term targets to really increase the levels of recycled materials to about 30% in 2025.
And on your inventory, it's still quite high according to analysts. You say that it will come down. When can that actually happen?
Well, it's all depending on how the pandemic and that situation evolves. We were on a very good trajectory out of 2019 and into 2020. So we believe that we have good mechanisms in place to as soon as possible jump on that trajectory again. So we need to come back with sort of exact times and dates, but the ambition and the direction is clear to us, and hopefully if and when restrictions are eased, we can go back to more normalized trading, and that will of course have the positive effect on the inventory development.
Great. Thank you so much for joining us. Adam Carlson there, the Chief Financial Officer of H&M, giving us his first interview of the day. Now, Bloomberg surveillance continues in the next hour. Tom Keene joins me out of New York. We'll look at GameStop. We'll look at Robinhood. A lot going on. I have to say the interview with Emily Chang was a really great one, speaking to the founder of Robinhood. So we'll play some of that and give you a sense of what happens next for this massive fight of Wall Street versus retail. Futures in the U.S. pointing lower a little bit. I'm also looking at silver. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
Robinhood raises over $1 billion to cover trades. Its chief executive tells Bloomberg it's restricted buying of certain stocks to protect its financial position. The EU is set to tighten rules on the export of coronavirus vaccines. Ursula von der Leyen tells AstraZeneca it must honor its contract. And H&M earnings beat expectations amid lockdowns as the new chief executive cuts costs during the pandemic. Well, good morning, everyone. This is Bloomberg Surveillance. I'm Francine Lacqua in London, Tom Keene in New York. Tom, I have to say probably 80% of what we'll do in the next 2 hours will be focused on Robinhood, will be focused on the underlying issues. I spoke to a central bank governor of Ireland. He says, look, there's nothing that he worries about in terms of financial stability, but we're also not sure exactly how this will play out.
It is new. And Kevin Roos of the New York Times nailed it, Francine, when he said, look, the internet technology went through the book industry and that industry and another industry. And now internet and technology is going through the securities trading industry. It is not a surprise there was a $1 billion cash call, the letters of credit taken out with JP Morgan and Goldman Sachs. The mystery, Francine, is what happens on this Friday.
100%, Tom. And there's one thing that actually caught my eye is silver market options, and I'm looking at that now. I have to say that there was an unprecedented surge in that after some of the Reddit day traders talked up the metal as the next short squeeze. So let's look also at silver. Let's now get to the Bloomberg First Word News. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine, Tom. The stage is set for another wild day in the markets. The day trader favorites that plunged yesterday, such as GameStop, rallied after brokerage Robinhood said it would lift trading restrictions on some of the stocks. Robinhood's decision to limit the risk to itself ignited an outcry from customers and American politicians. Meanwhile, the brokerage raised $1 billion from investors after the stock market's central clearing hub demanded more collateral. President Biden is working the phones trying to round up Republican votes for his proposed $1.9 trillion stimulus plan. The president spoke to Republican Senators Susan Collins and Rob Portman this week. Republicans have given the stimulus a cool reception. Winning bipartisan support would enable it to move more quickly through Congress. And the European Union is raising pressure on AstraZeneca over coronavirus vaccine shortages. European Commission President Ursula von der Leyen demanded that the drug maker fulfill its contractual obligations. The dispute was triggered by Astra's decision to prioritize Britain over the EU following a production glitch in Belgium. The shortage crisis could lead the EU to impose export restrictions on vaccines. British Prime Minister Boris Johnson expects 300,000 people to leave Hong Kong and move to the UK. They would take advantage of a new visa route to leave the former British colony. About 3 million people in Hong Kong are eligible. The UK offered the procedure after accusing China of breaking a joint agreement by imposing a new national security law. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom.
Thank you so much. Two ideas here, folks. We're in Mimi to Strength yesterday afternoon. Really got my attention. It's a separate story. And the VIX out 4 big figures to 34 shows attention in the overall market. I want to describe these stocks right now. AMC was single digit. It is up nicely at a 13-ish level, moving literally minute by minute. And GameStop was a 193 closed, was in the vicinity of a 300 pre-market, and is now launched out at 414. I really want to emphasize, Francine, that the symbolism of GameStop moving up and through the level of 550, 585 seen yesterday would be a ginormous moment for Wall Street.
Ginormous, Tom. You know, we've gone past CFA level 3.
We have. It's ginormous.
Big,
I like you got
ginormous.
a silver quote.
Yeah, so I really like the story, Tom. I was reading and looking at some of, you know, the graphics that you can see on Bloomberg TV. It's lucky we have access to things like that in times like these. Silver market's really seeing this incredible surge. I was looking at some of the options volumes, Tom, and they really took me, you know, aback. Reddit day traders, again, talking up the metal as the next short squeeze market. I'm looking, you know, that's the options market that I found. I know there's maybe another way of looking at silver because that's a weekly option, but certainly it's just incredible how fast things can turn. Stocks in Europe sliding overall. Again, I guess they're just trying to figure out what this volatile retail trade speculation, you know, means. And there's also a cash squeeze in China, Tom. Let's not forget it. Yep. You know, this has global implications, and the dollar on track for its biggest weekly gain since October. So to put all of this in context and together for team analysis, a few guests discussing GameStop.
So there's a lot of misinformation out there. This was a technical and operational decision.
It's a game of musical chairs, right? Where you've got too many people short. When the music stops, they have to find a seat.
We are worried about the integrity of the marketplace and the clearing systems.
Everyone's talking about rational or irrational exuberance. And what we've seen is actually some cash on the sidelines.
The administration is taking a look. The SEC is taking a look.
It's non-negotiable for us to comply with our financial requirements and our clearinghouse deposits. So we just have to do that.
We have heard from FINRA. They asked us how we were doing. Luckily enough, we have an automated liquidation system.
That has become very clearly a deeply personal phenomenon. And I kind of
I would equate it to like, you know, folks voting with their dollars in order to get back at or make a statement towards big finance.
Technology disrupts every industry. And hedge funds are going to learn that, you know, actually these retail investors aren't something to look down your nose and chuckle about.
Because of the low cost of entry into stock and the low cost of exit into stock, now you have a diversified force of, it was 14, 15 million people who are basically trading stock.
Well, joining us now, both Marcus Ashworth and Lionel Laurent from Bloomberg Opinion to try and make sense to all of this. So thank you both for joining us. Marcus, what are we living through? So what will this become?
I think we've probably seen the worst of this, actually. I think this little mini crisis, we're living in febrile times. Obviously, what happened in Washington earlier in the month, it seems to have spilled over in an overall excitement. But, I mean, compared to March, April last year, where we really did have systemic problems and the Fed came and did extraordinary things, even compared to the global financial crisis, I don't think that this is more of a storm in a teacup. It's important for regulation. It's not important, I think, for systemic risk here. I think the fact that the whole collateral and clearinghouse requirements are working its way through, we're seeing margin being posted and more margin being required. I think the system is working. It's just not very pretty, and there's perhaps things need to change, but and how the rules are. But I don't necessarily think that the system itself is at risk.
Lionel, you had a brilliant article that actually, you know, made me weep and laugh at the same time, calling it, you know, the French Revolution of GameStop. And you basically draw the parallels between what's happening in this, which is Reddit, day traders versus Wall Street, and what could happen with Bitcoin.
Yeah, I mean, to prove the point, Elon Musk just put the word Bitcoin in his Twitter bio and immediately moved the market. The Bitcoin is up 13%. I think Marcus is right. There's not so much systemic happening now, but the thing is, technology accelerates human nature. This is just human nature playing out, and regulators always seem to get there second, right? They seem to get there last. So I think obviously, crowds can be wise. They can also be dumb, and I think that if you have no rules or if the rules aren't clear, then you're going to have problems. So I think the SEC and the regulators, it's a pretty existential issue. How do you avoid being disrupted by social media?
Marcus Ashworth, wonderful to have both of you with us today. Marcus, I want to go to your important insight. The worst is maybe over. JP Morgan folks with a terrific research note on degrossing, which is where you unwind all the different tensions that are out there. Marcus, how many tranches of cash call can someone like Robinhood go through? Is it one and done, or can they do this on Friday? Can they do this through the weekend into Monday, Tuesday?
Well, I think the point for me is that you don't give more money to something like Robinhood unless you're confident that what you give them is sufficient and that the business itself is sound. So, in my sense, I think the system is working here. It needs a cash call. If it gets it and the investors are prepared to put their money behind something like this, then that's great. Obviously, you know, if the regulators have to step in and support, that's a different story altogether. But the real parallel here is MF Global, and before that, Lehman. We don't want systemic crunch whereby people can't reach accounts. And I don't think we're at this stage. The fact that they can get access to capital and that process is working smoothly, I think is a very healthy sign.
And folks, I really want to emphasize for Francine and all of us at Surveillance, we're really trying to not be inflammatory here. I want to make clear that the $1 billion from the investors of Robinhood is completely separate from the letters of credit from JP Morgan and Goldman Sachs. Those are bank agreements with a great tradition and separate from the cash call. Lionel Laurent, I want to get back to the social issues as well. This is a learning curve for everyone on social. And as I said yesterday, I take great issue with the idea of the boys on the couch. I just flat out disagree with it. What have the sophisticates learned on social that they can do again?
Well, if you are an influencer, if you have a lot of followers, right, you can get your trade done. If you are on Reddit and you're the first person to say, look at this, and everyone follows you, you can get in and you can even get out. But for all of the other people who are in the trade, it's a bit like the reverse of Melvin. you can have the best trade in the world. How do you get out of it? So I'm sure that a lot of people have already made money from this trade, and a lot of other people are sitting on losses and working out how they're going to get out of it.
Marcus, I know we've been looking at some of the movements on silver options. Is that the next thing that will blow up? I mean, are hedge funds now looking at Reddit to try and figure out what happens next?
Yeah, and definitely, I think all the hedge funds who may have been hurt will be upping their AI spend to make sure they can analyze what's going on into Reddit for future signs. But clearly, silver is one of the things which you can see. What's happening here is that people are not looking at, say, banks or systemic stocks. I mean, bar Nokia, which we read about yesterday. They're looking at things they know, they understand: gaming stocks, tech stocks, crypto stuff. And indeed, weirdly, we're going to go possibly onto mining and commodities like silver, because that's clearly an unloved and easily, they've probably read the book Silver Bears at some point. So, it's interesting here. I think at some point we may have to question whether or not if you post anything on social media or in any forum, be it an investment bank, that there is a holding period for the stock that you, or position you hold. Other than that, I think that it seems to me that the regulators are doing the best they can.
Yeah, I mean, Elon Musk, put hashtag Bitcoin, which I think is exactly the same thing that Jack Dorsey had on Twitter. And, is he like now the most important asset picker or stock picker in the world?
He's absolutely loving this, isn't he? He's milking for all it is. And earlier today, he put an even more important post up, I thought, which was, you can't short your house. Well, technically, we know that's sort of what happened in 2008. But bar that, you can't short your car, you can't short your, anything physical. So why can you short stocks? So he's trying to stop or get the short selling practice banned. Now, I think that's wrong. I think short selling offers a very healthy sunlight disinfectant process in markets. But, clearly that's what they're railing against. They want to get short selling banned in some shape, form, or size.
I want to go to both of you here to wrap this up. I'm going to start with you, Marcus, and then go to Lionel. I want to put some historic value on this. Dennis Gartman killing it the other day, and Steen Jacobson at Saxo Bank I thought was brilliant as well. Marcus Ashworth, Francine alludes to silver, and for you and me, because Lionel's way too young to remember this, is Silver Thursday. It was 40 years ago, folks, where the Hunt brothers cornered the silver market. Is that all this is, Marcus? Are we just back to good old cornering of markets?
Well, precisely that. And clearly this is exactly what people have done. They spot where the shorts are. They work out where it's easy to squeeze. And it's just good old squeezing of markets. It's happened since time immemorial. And it's just the way they're moving it, in the sense it's little guys banded together rather than, say, an evil hedge fund who creates a position, which is, it's just a reverse from, well, it's fascinating to watch, but it is markets, and the markets do seem to be working in the normal sense.
Lionel, in 1980, there wasn't Reddit or Twitter or social to help the Hunt brothers. How do we manage the social now, or is it what it is?
Can I take you back even further, Tom, to 17th century Amsterdam, when you had tulips as the Bitcoin of the day.
There we go.
And the East India Company as the GameStop of that time, and you could spread misinformation very easily without Reddit. You just had to run around and say, this company's doing not very well. And so to drive down the price, you could short it, and then you ask the government to bail you out. So I'm very cynical. This is all things that we've seen before, and it's going to keep going. Regulators get in the middle of it.
There's the banner, Francine, for the next buck. Lionel Laurent, a cynical. Lionel, thank you so much. Marcus Ashworth, thank you so much. Francine, all I know is I believe the La Croix fortune was started in Genoa in the 17th century off the tulip trade.
On Bitcoin.
You took the other side of the tulip trade, right?
You know what, Tom? Also, yeah, we did. Actually, Genoese are very known for, looking at their purse strings and good investments, something that me personally,
yeah, I know.
I am not. I'm always on the bad trade.
They've been short Venice for 400 years, I know.
Tom, I'm also obsessed. I don't know if you've seen this, the video of a normal person in her car explaining the stock market. I think it's like 16 million views right now. A lot of people just can't get enough of that. We should get her on.
Francine, you should have had a video at the dining room table last night. Prada was going on about all her friends making money.
There you go. The Bitcoin craze, just like the tulip craze. Coming up, an exclusive conversation with Mark Carney. Maybe we'll touch on financial stability, but maybe we'll also focus on the UN climate change, because he's, of course, special envoy for them. We'll talk about climate change and financing climate. That's at 6:30 a.m. in New York, 11:30 a.m. in London, and this is Bloomberg. This is Bloomberg Surveillance, Tom and Francine from London and New York. Now, to talk about a market, we're going to talk about valuation, Tom, but actually we just need to talk about this mega fight going on between retail versus Wall Street, and we're delighted to be joined by Luke Hickmore. He is Aberdeen Standard Investments Director. Luke, great to have you today. How much focus and how much time do you spend figuring out what happens to GameStop from here? Are there market repercussions that go far beyond that?
Yeah, I'll see if I've got any.
I'm not sure we can hear Luke, actually. This is one of the beauties, Tom. You have these funny moments when there's, the Zoom call goes down, or he can hear our producers, but he can't hear us. Should we do a data check, Tom?
We should do a data check.
Yeah, is above 100% higher?
Yeah, frankly, it's a good time to do that. Let's take advantage of this, and I don't mean with any disrespect to Mr. Hickmore. Futures negative 47, Dow futures negative 300. And what's so important in the broader, the aggregate, folks, is this morning I want you to follow the VIX. This is the volatility index of the Standard & Poor's 500, and it's not supposed to be at 34. A guy out on Twitter, Michael, I believe, nailed this yesterday, that the VIX is supposed to be right now like 27 or 26 maybe, I'm guessing, and we've got an elevated fear-driven VIX, and that's your thermometer to get over into the market. GameStop 402, Francine.
Yeah, Tom, if you look at, the wider impact, of course, on the markets, or these lingering concerns about this, volatile retail trade speculation, and we're also seeing a cash squeeze in China. Take two. Let's try to get to Luke Hickmore, who can hear us, I hope. Luke, can you hear us? It's all about GameStop.
I can definitely hear you. Hopefully you can hear me.
Great. Luke, does GameStop translate into your world? Does it start infecting the rest of the markets?
It's hard to say yet. There's a few things that might come through out of this. So we were talking over just yesterday about the CDS market and how that's been used for people to short in credit for years, but volumes have dropped a lot. Maybe we might see some of the hedge funds shifting into that space, actually generating a little bit more volume there, which would be a good. Other than that, it's really hard to say how much of an impact that has on credit and debt markets, apart from we're all just stuck in the headlights like everybody else. And as Tom says, that VIX move could end up being really important. There's a very clear linkage between VIX and where high yield credit in particular starts to trade. So if this continues to move higher in VIX, we could see spreads reacting quite suddenly, I think, over the next few days.
I mean, I think that, you know, my only question of the day is, are you now on Reddit, Luke, trying to figure out what they'll go after next?
I've been on Reddit a while, but I'm not a big user of it. However, my wife is, and she's been sending me some fascinating posts from people. But, you know, I'm not going to sit here and try and figure out where the crowd on Reddit are going to attack next. That bear hunt they seem to be on is a dangerous one to try and follow. And, you know, the silver one, there are stocks of physical silver there, which can be used to bring that back down to a more supply-demand led level, right?
Look, this is brilliant. Thank you so much for coming on and bringing that up. And I give Francine immense credit. And of course, that's that LME thing. It's Francine, guys, having a cocktail at the Dorchester during the LME week. Luke, this is really, really important. The idea of intangibles like stocks and fixed income versus the tangible world of mining. Are we at risk of a run on silver, or does tangible asset get in the way of that?
I think it does get in the way of it. You know, your commodities should trade at their lowest production price. They shouldn't trade at this kind of speculative bubble that gets pumped up. And there are enough stocks around. I was reading one of your articles today, said around 3 times the amount of outstanding futures in physical stock. So, you know, if we get the traders come in with the physical stock, that could come back down to a more balanced price quite quickly, I feel.
Look, we stagger into February to move away from the mania of the moment. One of the manias has been the guesstimate of inflation. What is the Aberdeen call if we do break out to higher inflation, or can we maintain this disinflationary tendency?
Well, let's face it, we're going to go higher in inflation over the next couple of months. There's very little we could do about it. And again, it goes back to commodities. This time last year, we were talking negative oil prices. That has to work its way out of the base effects for inflation over the next couple of months. So I would expect to see a number over 3%, maybe in March. But I don't think it's going to stay there. The conditions are not right for inflation to take hold for the long term, which is what the Fed's going to look at. You know, they'll let it run hot for a few months without any problem at all, but I don't think the conditions are there long term.
Look, give me a sense of what you make of the ECB trying to, convince the markets that a rate cut could be coming. Are they ready to cut rates, and what does that mean for where you want to be positioned in the markets?
Yeah, it's strange, isn't it? You know, they seem to be changing their view quite a lot on this, that, you know, we're not going to cut rates again. We're going to use all the other policy tools we have. And as you say, more recently, that's changed again. And it does feel like the market's started to price that in. If we didn't have all the other mess going on right now with GameStop and VIX and silver, I think that would be one of the most important topics. There's a very good chance they will cut rates, I think. Perhaps not by much, but just to show an intent, but also perhaps increase some of their asset buying programs, because the European economy, out of the major economies that you could look at, is the one I think is most risk going forward of not getting inflation coming back, not seeing growth coming back in a reasonable way. And Germany in particular could see some sticky unemployment going on for a couple of years.
Look, we saw renminbi go to new strength in the New York afternoon yesterday. It was really quite something, folks, to see that quote right now, 644 on renminbi, which speaks volumes. What is the outcome for our viewers and listeners worldwide to strong Pacific Rim?
Look, watch what the RRR rate does in China like a hawk, because we've seen market volatility wherever it comes from. One of the places it comes from is a stronger and stronger RRR, and the overnight deposit rates creeping up, pushing up the renminbi as well, are warning signs. If the Chinese authority get on top of this in the next couple of days, then perhaps they're not looking for a stronger renminbi. But if they are, that changes the game an awful lot for where inflation gets exported to if you see it over in the Far East. But again, that could just be short-term inflation rather than long-term structural change. But those indicators of risk are starting to flash yellow, I think, from China.
Luke Higmore, this has been very valuable. Thank you so much with Aberdeen Standard this morning as well. Futures negative 44, and again, the VIX out 4 big figures. You heard Mr. Hickmore say that's something to watch, 34.28 as well. On the GameStop watch, we're settled at 400, 193, up to a 300 level on the bounce yesterday afternoon with the announcement of trading, and we go back up to 400 now, about 150 points below the nirvana of yesterday. My book of the year a few years ago, Mariana Mazzucato, has something new out on the mission economy, and also Mariana Mazzucato on the casino. Stay with us. This is Bloomberg.
一个就是我们看中它的那个品牌吧，它品牌就是说东西比较干净嘛，然后比较方便的话，味道也还可以的话，我觉得我会考虑吧。外卖的话呢，也是一种方式，就是品种会多一点嘛，各有它的特点吧。
这个车的话，目前我们是通过这个手机 APP 上，就手机扫码，然后微信和这个支付宝扫我们这个车上的这个二维码，大家就会进入到一个小程序的这个界面，然后呢就可以选购自己喜欢的商品，然后付款之后呢，这个柜门会自动打开。
支付成功，请拉开右侧车门取货并关紧柜门。
然后我们会取餐，然后完了之后呢，就把餐这个柜门关上，然后整个购买的这个流程就会结束。
柜门已打开，请取出货物并关好柜门。
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Good morning, everyone. Bloomberg Surveillance. Francine Lacroix and Tom Keene. We begin in America an early morning on a $1 billion bailout of Robinhood. Much more going on. We'll touch on that through this discussion, but many other discussions through the morning. I really want to stay with you through the morning as we try to bring some common sense to what's going on. It is an historic morning for New York Wall Street. We get lucky. It's okay 3 months out, 6 months out, to book Mariana Mazzucato to beat up on her new book, Mission Economy. But it's far more important to speak with a UCL professor about the moment at hand as well, because the moment at hand is in the mission economy. It's about the new rules and the myths of capitalism. Professor Mazzucato, you were my book of the year a couple years ago. I haven't really looked at mission economy yet, but thrilled you've got a new book out. I want you to sit in London, wherever you are, and comment on how you observed GameStop. Comment on this clash of technology with a traditional process of capitalism.
Well, I mean, you know, let's broaden the gaze a bit, right? We've got tech, we have the digital platforms that we're talking about, we have climate change, we have the health pandemic. What they all have in common is that we need to govern the process in the common interest. And what's, you know, the common theme in my different books, which you always get me on for, which is wonderful, is that unless we actually know how to shape markets as opposed to constantly just fix market failures, in any of these areas we get it wrong. And I do think the COVID moment, where we have the digital divide, where we have the health pandemic, where this particular crisis is sitting on top of a climate crisis, we just have to go back to first principles. And that's really what the book is about.
I want to get to that in one moment. I want to talk about something in your book, serendipity and collaboration. We're seeing serendipity, we're seeing collaboration now by smart young people sitting on couches saying to hedge funds, forget about it, we make the rules. How collaborative is this new technology, whether it's a crisis like GameStop or it's to the broader world economy that you look at?
Well, I mean, you know, when I say go back to first principles, we should also ask, where does this technology even come from in the first place? And that was kind of 2 books ago in The Entrepreneurial State, where I talked about how everything that makes our iPhone smart and not stupid, from the internet, GPS, touchscreen, Siri, and I could go on, was all actually government financed, right? So, you know, what happens then when this technology and the algorithms underlying them are actually increasingly also about extracting value, not creating value, but even more so, what does it mean to truly have a public-private partnership, a symbiotic mutualistic partnership, and not a parasitic partnership in these different spaces? And that's why the moon landing is so amazing. There is huge amounts of private sector innovation and investment from companies like Honeywell, General Electric, Motorola, of course, large state funding from NASA and other public entities, but they were going after a common project. So the real question is, what is the common project underlying, you know, today's news?
Yeah, so what is that common project, Mariana? I mean, we're fighting climate change. We're, you know, everything we're doing, right? But what should it be? Because everything we're doing is also under the president, you know, the presence of the capitalism that we know.
Well, first of all, let's not forget there's different ways of doing capitalism. I gave a talk this past Monday at the World Economic Forum where you and I last year were together physically in Switzerland. This year we're all zooming in. And, you know, all the talk, again, is about stakeholder capitalism. Now, if we properly had stakeholder capitalism and not just capitalism maximizing shareholder value and kind of gaming the system, then that would be a very different conversation, whether we're talking about digital platforms, health, or climate. So we need to remember, first of all, that there's different experiences in the world. Stakeholder capitalism is practiced, has been practiced in certain companies, in certain parts of the world. So we need to actually learn from those experiences and walk the talk. And there's no better place, I think, right now than the vaccine to talk about that, because it's not enough to have, you know, Pfizer, the National Institutes of Health, which is public money, Moderna, Oxford University, you know, investing in something. The question is, how do we then govern it for purpose? And that's really what the Moonshot book is about, which is, what is the common purpose? With the vaccine, it's not just to get a vaccine, it's to make sure everyone gets vaccinated, right?
But Mariana, okay. But if you look at the commission, they can't even have access to the vaccines because, you know, they started too late. So where do you start in actually changing so that you create the system that you're seeing, which is, you know, mission critical, you achieve the goal that you set out?
Right. So, you know, I think we're bringing in different issues here, which are all related, so it's a good thing. But one issue is also the capacity and the capability on the ground organizationally. And whether we're talking about the European Commission or the UK government, which is where I'm sitting here in the UK, which has outsourced its capability and its capacity so much to the private sector that a couple weeks ago, a Tory Lord, Agnew, said that the government had become infantilized. It's such an interesting word. I've started to use that. You know, by outsourcing your brain you get infantilized. You lose your capability and capacity to manage anything, whether it's Brexit or COVID. So instead of just kind of taking the status quo, so say the European Commission getting in there too late, the question is, going forwards, how can we actually govern and shape and co-create markets in such a way to achieve the goals we need, which is inclusive growth, sustainable growth? And I do think at the center of the COVID recovery scheme, and we all are talking about building back better, has to be green growth. And this is where the European Commission has gotten it right, more so I think than the US, even more so than China, which is the current European recovery scheme, which is close to $1 trillion, is conditional no longer on austerity, which is the conditions that we set in the financial crisis for the recovery schemes, but on investment around digital and climate. And then there's a separate pot for health.
Mariana, you have a phrase that is absolutely spectacular. And folks, if I was sitting in Happy Valley right now on the deck with Francine, this would be my title for this year's Davos. It is a shaping, not fixing Davos. Mariana, that is absolutely brilliant. This describes so much of what and Mariana, I hate the phrase thought leaders and all that other malarkey. This is so true. They're trying to shape the message and not fix it. Discuss that.
Well, in some ways, I guess I'm not sure what you've just said, but what I usually say is that we should stop just fixing market failures, actually waiting for the market to mess up before policy comes in. We need a different type of policy, and we need a different type of public-private partnership that co-creates and shapes markets to deliver the outcomes we actually need. And that requires fundamentally a different partnership, literally a new contract. And I do, I'm not a big fan of getting lawyers involved, but I really want to start looking at the contracts, the procurement contracts, the grants and the loans. If we could embed within them a common purpose, like the moon landing had, because that was embedded within the structure of how NASA collaborated with the different companies, we would have a very different outcome today in health and also around,
Mariana, take it narrow. Should Gary Gensler with the Biden administration be more proactive about fixing, not shaping Wall Street, given the crisis it's in this Friday morning?
Well, I mean, the big issue there is what is the relationship between finance and the real economy? Most of global finance actually ends up back in the financial sector. In the UK, something like only 20% of finance even goes into the real economy. Now, once it goes into the real economy, how can we make sure it actually helps to steer our system in fundamentally different ways? Everyone talks about the green transition. Biden's talking again about the Green Deal, but finance has to be part of that solution. And unfortunately, we have lots of short-term finance, we have speculative finance, even venture capital, which in theory is like the better form of finance, is very exit-driven. That actually ended up really hurting the biotechnology industry, which ended up with lots of productless IPOs. We have to avoid that currently with all the innovation happening again in space with Elon Musk and clean tech. We cannot have exit-driven finance just trying to get a return and really creating a mess that we have to then pick up.
I want to come back with Professor Mazzucato with Francine and really dive into climate change and what it means out of the mission economy, a fabulous new book from Professor Mazzucato. We're going to take a break so she can decide whether to go long or short GameStop, and then we'll come back on negative 41, Dow Futures negative 290. Right now, Ritika Gupta on our First Word News.
Thanks, Tom. On Capitol Hill, 2 House and Senate committees are promising to hold hearings on those gyrations in the stock market. Lawmakers from both parties expressed outrage at Robinhood and other platforms that limited trades in companies like GameStop. Incoming Senate Banking Chairman Sherrod Brown says people on Wall Street only care about the rules when they're the ones getting hurt. Donald Trump has agreed to help Republicans try to retake control of the House next year. The former president met at his resort in Florida with House Minority Leader Kevin McCarthy. The Republicans need to win 7 seats to regain the House. McCarthy has now backed off his previous statement that Trump bore responsibility for the attack on the Capitol. And Mexico has now overtaken India as the country with the 3rd highest number of coronavirus fatalities. More than 155,000 people there have died from the virus. Only the US and Brazil have more deaths. Mexico's President Andrés Manuel López Obrador is currently being treated for the illness. Two Americans who helped former Nissan chairman Carlos Ghosn escape prosecution in Tokyo failed. In their latest attempt to avoid criminal charges in Japan, a federal judge has ruled that former Army Green Beret Michael Taylor and his son Peter can now be extradited. But that's unlikely to happen soon. The Taylors have appealed the ruling. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine.
Thank you so much, Ritika. Now, coming up later on Bloomberg Markets, Jan Hatzius, Goldman Sachs chief economist. That's at 10 a.m. in New York, 3 p.m. in London. I know they'll talk Treasury yields and, of course, GDP, but actually, I think he'll have a thing or two to say about GameStop as well. This is Bloomberg.
Let's just start with the numbers.
And it would be essentially free cash flow positive in 2021. That was sooner than people had been expecting.
We have pretty good numbers here in the biggest divisions of Morgan Stanley. They are firing on all cylinders.
We've had this huge rivalry historically between Morgan Stanley and Goldman Sachs.
There are 24 reasons for Mr. Diamond to celebrate today.
As much as people may want to focus on trading, for Bank of America, it's all about credit.
It seems the markets are very happy with Biden.
As we build back better, as we transition to a low-carbon economy, as we build businesses out of the pandemic, we keep a very firm focus on these areas of equality so that we're not leaving either communities or populations behind.
We not only have committed to, but also need to keep those commitments to have a more inclusive recovery from this crisis, a more green and sustainable recovery, and frankly, one more that pays attention to the needs of the people who are living and working in the economy.
I don't think the world should rely on ESG to be making up the rules that really governments should.
It is so important to push the law and push the boundaries.
Maybe it's easier to become, as a woman, a leader in that type of societies that are led by example and not by what I would call testosterone politics.
Well, various global leaders there speaking from the virtual Davos and Bloomberg's The Year Ahead conference this week on the need to focus on equality. Well, we're back with Mariana Mazzucato of UCL, who also has a wonderful book out. I think it came out this week called Mission Economy. And Mariana, we were having a spirited conversation, as we always do with you, about what needs to change in capitalism. And halfway through your book, and I absolutely, can't say enough of it. I just started. Basically, you put it very simply, but it's very efficient. You say we have to select a mission, implement a mission, and energize citizens for the mission. What do citizens want today?
Well, it's interesting, actually, because I feel like there's more movement within citizen organizations than in global governments for a green transition. Fridays for the Future is absolutely exceptional in terms of how it's galvanized students of all ages to really tell, our generation or even the older generation that they really didn't do their job. But the question is, the moon landing was sort of a top-down mission, right? And that was almost purely a technological one. The kind of missions we need today are much more social. They're wicked. They require also political change, behavioral change, and of course also technological and organizational change. But one of the questions is who decides what they are? So I always, say, look, let's not start from scratch. We have the 17 Sustainable Development Goals. Every country globally has signed up to them. They should take their names off from signing it if they're not serious about it. So how do we actually create kind of moonshots like, a plastic-free ocean, carbon-neutral cities, or even, fighting knife crime in London where you and I live, Francine? That itself could become a mission if you say zero knife crime. And then the really interesting thing with the moonshot was that, or the Apollo program, was that it required so much intersectoral innovation. It was not just aeronautics. It was nutrition, materials, electronics. The entire software industry in some ways was a spillover of that. So what we also need to start doing is stop having kind of a sectoral approach or obsessing about things like artificial intelligence and really ask, what are the problems we're facing today? How can we design the kind of question also together? Again, that's where the kind of citizen engagement comes. Yeah. But then do everything we can from using innovation policy, industrial strategy, procurement policy, and really galvanize as much bottom-up solutions and experimentation fuel that's actually solving the problems for real and not just talking about them.
What are you expecting from the Biden administration? I mean, what will their mission be?
Well, first of all, we need to remember that Biden's coming in after, 4 years of mercantilism. Trump really did bring us back about 400 years. In the 1600s, it was all about, getting the exchange rates right, building walls, trade agreements, the 1651 Navigation Acts. And, what happened after that is that there was lots of attention actually to, industry, innovation, and manufacturing. And, what Biden is now talking about is, okay, if we really want to make America great again, Trump's slogan, that actually is going to require science, technology, investment, and innovation. And the first thing he did almost on day one was bring the U.S. back into the COPS agreement. And also he's talking about getting back into the World Health Organization. So then the question is, instead of just kind of joining these talk shops, and they're not just talk shops, they're very important organizations, but just, talking about the big problems, what does it mean to really, fuel American and global solutions, and especially global collaborations, because no one country is going to solve climate change on their own. And that's very true also of the health pandemic. By definition, because it's a pandemic, we all need to solve this together. What is this going to mean for actual U.S. policies? I think that's the question. And, he is talking a lot about science and technology. And I think we just need to be careful not to go backwards and think that somehow technology is a panacea. And back, on the back of our previous discussion some minutes ago, we have to govern this process in very concrete ways in order to meet these societal goals.
Mariana, 2 days ago, 54 years ago, was the greatest failure of Apollo. Apollo 1 burned up on the launch pad at Cape Canaveral with Grissom and Chafee and Ed White. One of the great distinctions here is the Apollo program and all of NASA allowed and modeled failure. Do we have a modern capitalism starting from 2007 that has a fear of failure?
Well, what's interesting is, that the whole tech community that we were talking about before actually brags about how risk-taking they are and that they don't feel failure. But so much of the technologies that actually they use came from a risk-taking government. But that has almost become an exception to the rule. Most civil servants globally, public servants, work in public organizations where you fear making a mistake. Why? Because if you do make a mistake, you're in the front page of the Daily Mail or, whatever the equivalent is globally. And so one of the first things we need to do when we talk about partnership and we talk about goals and working together is to admit that we're going to have a trial and error process. And if you're fearful of those errors, you're in trouble because you need to go through that process. But you should also be fearful if you haven't invested within your own organization on how you learn from experimentation. So just making mistakes, isn't a thing in and of itself. It's how do you learn from experience? And unfortunately, so many different public organizations have stopped making investments within their own public capacity. And this is something that NASA, by the way, was really, really conscious of. I have a chapter in the book where I talk about how they talked about their need to both, collaborate with the private sector, but also to know how to do that. And they said, if we stop investing ourselves in research and development and also in other types of intra-organizational capacity, we won't even know how to write the terms of reference.
Right.
And they also said we need to be aware of brochuremanship, which is such an interesting word. There's so many interesting words back when they were thinking about how to collaborate. And that basically meant, let's be careful not to just be convinced by shiny PowerPoints. If we're going to collaborate to get to the moon and back in one generation, we're going to need sort of serious, innovation capacity in both the public and private. And I think we've currently really lost that in many public organizations. And we especially have problematic partnerships. And there's no place like health to see where it can really go wrong.
Okay. I'm sure Robinhood has a shiny PowerPoint out there for Mazzucato to review. It is a wonderful book on the mission economy where Mariana Mazzucato straps the great triumph of the Apollo program over to the challenges of capitalism moving forward. Futures negative 37. We're watching GameStop and the rest. Coming up, Chris Elman, California State Teachers Retirement System. I think he was in and out of GameStop like 5 times yesterday, something like that. 3 p.m. this afternoon, the gentleman with an actuarial assumption. Stay with us. This is Bloomberg.
To be an action that was either illegal or caused disruption. This was really political satire, kind of writ large, and it was all about actually trying to get to the man himself and make him see how we see him. And in order to do that, we knew it had to be big and it had to be colourful and it had to be somewhere where everybody could see it. It's important because we didn't just do this for attention. This was actually about making a serious point, which is that the majority of people in this country do reject the politics that Donald Trump represents.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Bloomberg surveillance. Good morning, everyone. Francine Lacroix and Tom Keene. We're looking at our Bloomberg terminals, trying to figure out pre-market. GameStop at 400 level, now edge at 389. Right now, in the social aspects of all this, Alex Webb, by a command performance, we just demanded we get 2 questions in to Mr. Webb right now. Alex, I don't want to talk about GameStop. I don't want to talk about the finance part of this. I want to talk about the social. Are you surprised at what we're seeing on Reddit?
No,
No, I think if you look at the trends of the past year, it shouldn't be a surprise to anyone that where you might have had small pockets of people in towns, villages, cities around the country, meeting in small groups to discuss topics about which they're passionate, the fact that now these groups can meet in forums and on Facebook, Twitter and elsewhere and find like-minded people and rally together to discuss a common cause, that is the thing that has really risen to the prominence this year and indeed over the past 5 years, but it's become particularly acute in the past 12 months.
Does information harm? I mean, this phrase, too much information. Do we have too much information within our financial system?
I always tell people whenever I'm writing a story, I'd rather have too much information than too little. I think the thing that has always been the risk here is where opinions become conflated with facts. That's a broader concern that we're experiencing right now. And people saying, I think stock X is going to go to the moon is very different from presenting the substance-based arguments that demonstrate why you think that is the case. And we've seen that conflation of facts and opinion, play out in any number of spheres. And I think that is also what we're seeing here.
Right. I wanted to get this in, folks. Alex Webb on the social aspects that we're seeing. Lionel Laurent also out with a wonderful column on this today out at Bloomberg Opinion. We are going to drive forward the conversation on the moment at hand. If you're just joining, $1 billion cash call from investors for Robinhood, including the utilization on top of that of letters of credit from JP Morgan and others. Is it a crisis? I'm not sure. What I know is it's a Friday and we'll have good conversations. Chris Morangi will weigh in with Gabelli Funds. Futures in negative 34. Stay with us. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
This morning, the bill comes due for the free lunch of, quote, investing for everyone. The adults enter the casino and demand Robinhood put their money in motion. The DTCC looks at Thursday post-trade. They demand Friday pre-trade $1 billion. Robinhood, well, they take advantage of credit lines from JP Morgan and Goldman Sachs, an additional $500 million, give or take $100 million, and GameStop from $500 to $100 to $193 to a clear and present, well, $400 per share. The gentle lady from the Bronx, the gentleman from Texas, AOC and Ted are on the same page. Does Las Vegas treat their customers this way? Good morning, everyone. Bloomberg Surveillance. I'm Tom Keene at the casino in New York. Francine Lacroix at the casino in London. Francine,
finally,
I want to go.
An agreement.
I want to go right to AOC and Ted in agreement. We'll do that. Balance of power. 12 noon today. I'm threatening to do it for David Weston. He's out on a sabbatical. Francine, you nailed it this morning. This is going to go to other asset classes. Tell us what you've learned in commodity-based London about silver.
Well, Tom, I was looking at some of the option trades. Now, this is thanks to the power of the Bloomberg, and so we were looking around things with the Ardeni Burger, and it's actually incredible when you look at the amount of volumes in silver options, and this is after some traders on Reddit saying this is our next squeeze. So if you're a big hedge fund manager, frankly, if you're also a small hedge fund manager, Tom, do you get a Reddit account and actually try and follow? Do you make an algorithm to try and follow what they're trying to do? I mean, there's a great John Author piece, Tom, that came out moments ago saying whatever this will turn into, it will be a historic for finance.
Yeah, I'd go back to 1980, and the only one in the building besides me is Marty Schenker that actually remembers the Hunt brothers and a modest issue of silver.
Yeah. And before that, tulips.
Well, Marty remembers the tulips.
You weren't around for that.
Yeah, futures, negative 34. What you need to focus on, thank you to Aberdeen Standard, who nailed it. Watch the VIX, 34 right now, up 4 big figures. It's not supposed to be there with a Dow at 30,259. With our news in New York City, here's Ritika Gupta.
Well, Tom, the stage is set for another wild day in the markets. The day trader favorites that plunged yesterday, such as GameStop, rallied after brokerage Robinhood said it would lift trading restrictions on some of the stocks. Robinhood's decision to limit the risk to itself ignited an outcry from customers and American politicians. But the firm's CEO told us the limit would also protect customers.
It's non-negotiable for us to comply with our financial requirements and our clearinghouse deposits. So we just have to do that. Robinhood has always stood and will continue to stand with the individual investor.
Meanwhile, the brokerage raised $1 billion from investors after the stock market's central clearing hub demanded more collateral. President Biden is working the phones, trying to round up Republican votes for his proposed $1.9 trillion stimulus plan. The president spoke to Republican Senators Susan Collins and Rob Portman this week. Republicans have given the stimulus a cool reception. Winning bipartisan support would enable it to move